Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I'm the aggressive growth stock strategist here at Zacks. And I got two more stocks for your aggressive growth radar screen. This week, we're looking at the chips. You know, the chips have been selling off of late. It's been a rotation out of that sector. Obviously, there's a big name that we're going to focus on second. That one reached the largest market capitalization of any stock, but there's a lot of things going on in the space. So let's just jump right into it, shall we? First one is going to be American Superconductor, and that's AMSC is the ticker. It's a Zacks rank number one. That's a strong buy. A for growth and F for value. My growth divergence tells me right away I'm on the right path because growth investors and value investors are both inherently looking for different things. This company had a good quarter right here. We'll dive deeper into those numbers in a minute. You can see the stock really took off as a result. You know, about a year ago, there was a thing on the Twitter and on the Reddit and on the social media that suggested that we've achieved superconductor status, and it was a big thing. Stock popped up to $24 from right around 12, but it turned out not to be what it was purported to be. So keep that in mind. Maybe we're probably making advances. They're probably making advances, getting closer, but good stock here to check out here. So obviously the dip has got my attention. Run up, come back. Is this just a chance to get back in? All right, let's go to the numbers that we love to see. Are you beating the number? 54% beat, yes. 100% beat, yes. 142% beat, yes. And 266% beat, yes. Bigger and bigger beats and surprises. And, you know, we're losing money here. We're break even here, but we're earning it and we're earning more. Even when we've been calling for negative EPS throughout that time horizon. So what has that done to our estimates? Well, we can see here that this estimate went from a loss of 4 cents up to break even, a loss of a penny up to break even. Those looks very beatable. A gain of 6 cents up to a gain of 10 cents for this year. Next year, 22 cents shooting up to 33 cents. That's a big move. Percentage terms, right? Okay, so 50%. Let's think about the sales. Our sales growing 9% this year, 13% next year. So it's an acceleration. We're still kind of small at 160 to 180 million over the time period. All right. How about the valuation? Now we're at sky high valuations here. And one of the reasons for that is because you go from losing money to making money. You're only making a couple pennies. So it's a big number. But, you know, if we extend that number out to next year where it's at 33 cents, that number is basically going to come in by basically 50%, right? Still heavy, though, even if it was cut in half. So price to book at 5 times, you know, it's a high tech. It could be a big impact sort of thing if they figure out the superconductivity. Price to sales at 6 times. Top line growth most recent quarter. Big number here, 32%, and that's why it drove everything higher. Margins are headed towards being positive. Look at that. From minus 19% to minus 10% to minus 2%. We're about to see a dramatic shift in that if things continue as they are. All right, now we'll look at the chart. Boy, when did that thing pop up? It wasn't this long ago. I think it was a one-day event. Probably in the 10 to 20, we had a spike right there, but we're not going to see it on a chart this long in terms of time horizon. All right, we're all going to die in the pandemic. No, QE is going to push us up, and then we're going to have a tech wreck of 22, and we're going to start to recover, and then we're going to go higher. Boy, we're saying that for all these charts. There's a reason why I'm saying that for all these charts is stocks all tend to behave in the same fashion unless there's material bad news. This would be material bad news where you're missing the number all the time, but they've shifted. They started to beat the number all the time and things are moving up. All right, so we got not that much growth here in these numbers, but it's still good growth. So look for this to continue to improve margins and keep going higher. I like this one closer to $20 than $24, but it's still good. It's going to be on my list. It's a big move again today, 4.5%. American Superconductor, AMSC. All right, next one's Nvidia. Maybe you've heard of this stock. Maybe you haven't. Nvidia, NVDA, favorite among all investors. Stock Zacks ranked number 1, strong buy, A, growth, F, value. You've heard it. Here's our earnings. This will be our stock split, still run up, and then a big correction. So we're talking about why it is correcting here. I just wanted to highlight what I found inside it. So analysts are saying that it's the largest stock in market cap, possibly overbought, especially at that 140 level. We had a huge amount of options expiries and expirations happening, especially last week. There was the biggest notional value, over $5 trillion last Friday. We're approaching the end of the quarter, end of the half, and there's probably a little bit of redistribution, especially now as the thing started to come in. You don't want to look like you've had this much stock, Nvidia on your books. Maybe they're peeling it off a little bit. Maybe it's the idea of window dressing. That definitely comes into play. So 2.9 trillion. That's a big one. 44 times forward earnings. Still not even a nifty 50 name. Can you imagine that? All right, let's do our numbers. We've done these a million times for Nvidia. They beat, and they beat, and they beat, and they beat. But you notice that the beats are getting smaller. Analysts are finally starting to understand that this is a gigantic story. Even estimates are moving up. 57 cents to 63, 61 to 68, 239 to 268, and 273 up to 332. Good moves in the earnings estimates, of course. Everything is driven in this name in the top line, and there's a lot of expectations. We're looking at 92% top line growth this year to 117 billion. Next year, still good growth, 25%, but that's significantly down. But, is that the way it is? I mean, they've always been a little, this number is out there for that 2025. But that's why I have one chart at the end that's going to help us with this. All right, we're going to whiz through the valuation because everyone knows it. 44 times. Huge top line growth reported in the most recent quarter, 262%. That's huge. 59 times book because you're driving sales huge, value, everything's up. Margins, look at this, 43 up to 53 over the last 2 quarters. Great to see. Been great holding Nvidia. All right, here's our chart. A little different than our price and earnings consensus thing. This is our fundamental charts, as you can locate it here on the Zacks page. Fundamental charts. So our first line is the green one, and that's the stock price. And our second one is revenue, trailing 12 months, TTM. If you can go in here and you can search all different types of things if you want to, and look at what's important. I believe in this stock, revenue is the important thing. So as we're all going to die, we're still buying NVIDIA chips. Even in this tech wreck where prices came in, you can see growth was still kind of there, albeit slow. But then the hockey stick started shooting up towards the end. And I know I'm continuing that line to exaggerate the idea, but it's going to continue to grow, at least for the next foreseeable year, as AI products and that build out still continues. So I know the stock was 118, closed 118 here today. I see it up $6, 5%. Probably this is a good spot to be getting long Nvidia here, and especially if there's any more drops towards the end of the month, end of the quarter, end of the second half. All right, that's it for this week. Be sure to join me next time when I look at 2 more stocks for your aggressive growth radar screen. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.